Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. And today is May 26th, 2019, Saturday. And we have an extended long weekend this week. And so, as many of you know, I run a live stream Monday through Friday during the last hour of the market where I go through each stock in my watch list and we look for support levels, resistance levels, potential entries. I talk about why I bought a particular stock and how I'm going to manage it going forward. But this weekend, I had an idea, and I think I'm going to do this every week from here on out. But my watch list is about 40 stocks, well-rounded list of large cap companies in different sectors of business. But sometimes somebody will say, hey, did you see this stock or did you see that stock? And I say, no, I didn't see that because it was not on my watch list. So, having the 40 stocks in my current watch list is about all I can get through in an hour. But what I want to do is I want to, on the weekends now, go through each stock in the S&P 100, so a larger group of stocks. And it doesn't mean that I'm just going to find something to buy, but I'm going to create a secondary list so that during the regular live stream, during the last hour of the market, I will go through my main list, and if we get trades, then fine. But if we can't really find anything, then I can turn to the secondary watch list and see if there's some trades there. And I think this is a good exercise to go through the top 100 stocks in the S&P 500 in this segment that I'm going to do each week, not only to find potential setups, but also just for repetition's sake, for those of you who are learning how to trade. I think this will be a good weekend exercise. So with that said, that is what we're going to do, and I hope you're going to find this helpful. And if you haven't tuned in to the live stream Monday through Friday in the last hour of the market, give it a try. I think you'll enjoy it. So with that being said, let's go ahead and just look at all the go through each stock in the S&P 100 and see if something looks interesting. And I'll be pointing out potential areas where we might be interested in buying it, or if it's not interesting whatsoever. Okay, that's what we're going to do. I'm going to turn off the webcam, and I'm just going to put a picture of Katie and I back up there because I'm going to be looking away from the screen. So, all right, so we'll start with the S&P 100 here. First stock in the S&P 100 is Apple. As you can see, Apple has had quite a decline here from the top. What I'm looking for Apple, I'm looking for a close back above the 200-day moving average, or I'm looking for a 1050 EMA cross. And actually, I'll just show you here. So the pink line is the 10, the gray line is the 50, 10 EMA, 50 EMA. I'm looking for a 1050 EMA cross. That's a mechanical system, but let me show you the results here. And I should point out that these charts from etfreplay.com are used by permission. And so let's just go ahead and put in 1050 EMA cross. And you can see the results from this are pretty good. The results of entering the position when there's a 10 EMA crossing the 50 EMA and then getting out when it crosses back under, that particular approach since 2000 returned 5,681.9% with a drawdown of 50.9, but just regular buy and hold would have been 4518.1 and an 81.8% drawdown. So you can see that using the 1050 EMA cross actually made more and lost less than just buying and holding. And that's why I really like these mechanical systems. I think these are pretty easy systems if you're not a full-time trader to follow. They're long-term. So back to Apple, the 1050 cross is what I'm waiting for. Another potential signal for Apple is just a close back above the 200-day moving average and staying in the position as long as it's over the 200-day moving average, and getting out of the position when it is under the 200-day moving average. And we can back test that as well. So let's go back to ETF replay and just take a look at the statistics of staying in when it's above the 200-day, getting out when it's under the 200-day. And this is an amazing, amazing result. So since 2000, by using the staying in above 200, out below the 200, you would have returned 12,665.7% with only a 37.2 drawdown. During that same time, buying and holding Apple, you would have made 5,000, only. But you compared, you would have made only 5,500.9%. And during that time, you would have had an 81.8% drawdown. So you can see whether you're using the 1050 EMA cross or whether you're using just the 200-day moving average as your buy or sell signal, both of these have returned much better than buying and holding. So that's what I'm looking for on Apple. I'm looking for a 1050 cross above for one possible entry, or I'm looking for a possible close back above the 200-day moving average and a close back below for my exit. You can see the last time that happened was back here on the 15th of May, where it closed above and then it actually just closed back below. So that would have been a very, very small loss. But who knows, it could have gone for years, and that's what you're hoping for. The key to profitable trading is keeping your losses small when you're wrong, getting out quickly, and letting your winners run. So that being said, with Apple, that's what I'm waiting for. A 1050 EMA cross or a 200-day moving average cross for a mechanical system. For a discretionary system, right now we're at a 32.12 RSI. I'd like to see that close below 30 and then back above, and that would also be a entry signal, but not a long-term signal, more of a discretionary kind of trade. And those are the kind of trades that I talk about during the live stream. So is there anything potential right here for Apple? Yes, there is. I'm not going to mark it here for the secondary watch list because I already have that in my main watch list. So, all right, what else do we have? Next one is AbVibe. AbVibe is under the 200-day. I don't really like to buy a lot of things under the 200-day unless I have some other type of setups, multiple setups. Right here, it's not bad. MACD is positive. We've moved over most of the moving averages, but I don't like the 200-day hanging over our head, so I'm not going to mark anything on AbVibe. Abbott Labs. We had a nice V2 entry here. A V2 entry is when you have 3 bars, day 1, day 2, day 3. You have day 2 washout day 1's low, and then you have day 3 close above day 1's close. So this is positive. It's positive that it rejected the green line, which is the -1 ATR channel. It's still a bit range bound, as you still have to contend with this prior high here. It's okay, but it's nothing that really sticks out to me as really something that I would want to buy. A close back above this high here of the 16th, which would be right here. I would be more interested on AdVibe if we could close back above this particular previous range and fractal, and also close back above the 50-day moving average. But even with that, then you have the prior resistance up here. So I'm going to let this one go and not mark that as well. Accenture, we did bounce off the 50-day moving average. We're at a 56 RSI. Even if we take out this high here, we're going to have a bit of a high RSI reading, and then we're up against the previous resistance of this previous high. So nothing really here. You know, during this video, I'm going to be saying no to a lot of particular stock setups, even if they look decent. But I really just want to pick the very, very best ones as to put into our secondary watch list to look at. So Adobe, I guess I should mark Apple up there. So okay, so Adobe, you know, on the positive side, we did reject the 50-day moving average, but we've got all sorts of previous highs above us, no moving average crossovers, no MACD, positive MACD reading, so nothing on Adobe. Allergen, nothing there either. We're obviously under most of the moving averages. This seems quite weak, so nothing there. AIG, boy, that had a strong move off of earnings. It has continued to move up, but the RSI is over a 70 RSI. I really don't like to buy anything over a 62 RSI. It's just a little too high for me because most of the time you're going to find resistance in the 70 RSI area. Allstate. So, you know, Allstate, we had this move down, we had this move back up. It did come back down. Now it's trying to get back over. MACD has crossed. We're above 50 RSI. I would possibly be interested in Allstate if we could take out this previous high. And fractal. A fractal is where you have a point with two lower highs to the left, two lower highs to the right. So this does qualify as a fractal. If we got up, took this out, our RSI would still be under 60, giving us some room to the 70. Looks like MACD has just closed positive, the green line over the red line. This does look decent to me. So in the coming week, if this price does move above this prior high, I would be interested in possibly taking a position. So I am going to mark Allstate in our potential group for the upcoming week. Amgen, boy, just had a strong move down. We've had a rally. To me, this looks just like a counter trend rally that most likely will come back down. Who knows? But it is way under most of the major moving averages, so that's a concern. You've got the 200 and the 100 and the 50 way above, so I think they're better potentials to buy than Amgen. Amazon. So Amazon, like the rest of tech, has had a very difficult time in the last 4 weeks. I would be interested in taking a look at Amazon if we could close under the 200-day and then back over the 200-day. And let's just go ahead and test that, because we can test that with real data going back in time. So here are the results of buying Amazon and keeping the position while it is above the 200-day moving average and getting out of the position when there's a close below the 200-day moving average. So since 1990, buying above, buying above and keeping above and getting out below, this would have returned 1,329.5%. and with a 61.1% drawdown. Buying and holding, on the other hand, did return larger 2,309% with a 93.3% drawdown. So the approach of holding the position above 200 and selling the position under 200 did not perform as well. It did have less of a drawdown. So, you know, it still is a decent entry. You can see it's still a profitable entry. But let me show you one other possibility for Amazon. And again, this is more for long-term holders, but the 5-day moving average crossing under crossing back over the 50-day moving average is a good back-tested approach for Amazon. You can see we see the blue line just went under the gray line, so the 5 just went under the 50. That is the sell signal. That is the signal to get out. Do not get back in until the 5 crosses back over the 50. So let's take a look and see what the results were for that approach. 5, 50. And you can see the results there. 1,777.6% to the upside, 66.9% to the downside. While buy and hold was better, it was 2186, but it had a 93.9% drawdown. So you can see whether it's buying Amazon over the 200-day, getting out under the 200-day, or using this approach of the 550 SMA crossover. They both are nice, profitable, back-tested system approaches that right now on Amazon, yes, I would buy the next time the 5 cross back over the 50 because I know it back tests well. So that's one possibility. The other possibility is a close below the 200 and then back above the 200, which also back test well. So that is what I am looking for on Amazon. American Express. Go ahead and mark Amazon there. All right, so American Express, it's a 59 RSI. I do not like that we see how we had this new high here compared to this previous high. This high went higher than here, but you see the readings on the MACD. You see how these are lower, how low these green bars are compared to how high they were up here. That is what Dr. Alexander Elder, and he's one of my mentors. I've studied one-on-one with Dr. Elder, and he taught me this. But here you have a high, you have a higher high, but you have a lower divergence. A lower MACD reading compared to here, which makes that a double top. False breakout to the upside, return back into the old range with a bearish divergence. So this does not interest me at all, except possibly to the downside. But I don't do a lot of shorting, so I'm just going to skip over this one. Boeing, I would be interested in Boeing if we could close above the 200-day moving average. In this particular case, I like the setup. Because if we close back above the 200-day, we would also close back above this previous fractal. MACD has gone positive, which is a positive. So a close back over the 200 would interest me in Boeing. My initial stop would be a close back below the 200. And if it kept on moving, that's fine. I'm just patient with it and let it go as far as it can go until it gives you a reason to lock into profits. Bank of America. A close back above the 200 would be okay. I don't like all the congestion and all the moving averages that are above us here, so I think I just let that one go. Biogen. We had that big fall after earnings. Just move sideways, in order to get interested in this, I would really have to have some kind of a breakout or the lower range, but it's just really range bound now, so I'm going to let that one go. The Bank of New York, we are making a lower low here than this low, but the readings of the MACD are quite low. They're not quite as low as this, but the best divergence levels are when this second low, the levels are only about half the width of this. I guess these are about half, but I just don't like the extended move down here without any rally, so I'm going to let that one go. Booking Holdings has made a double bottom here. No divergences, so nothing there. BlackRock, BlackRock, it is positive that on Thursday we did go and test below the 200-day and then close back above it. We have a 37 RSI now. Not bad. I will mark that. I don't think I would just buy it here. What I would be looking for here is another test of this 200 to give me double confirmation. So we'll put that on the possibility list. Bristol Myers Squibb. I believe that is under the 200-day moving average. Yeah, it's way up there. So there's really nothing that gets me interested on Bristol Myers Squibb. Berkshire Hathaway, boy, oh boy, even with a stock like Berkshire Hathaway, you can really see the damage that has occurred over the last few weeks. Would I be interested in Berkshire? I would if we got down under the 30 RSI and closed back above. Right now we're at a 36.21. Conversely, if we close back above the 200, that would also get me interested, but not enough to really put this on our watch list. Citigroup. A close back above the 200 would be somewhat interesting, but I do not like that we're coming from a lower low. Do you see this low here? It's lower than this previous low. My guess is even if it does close above the 200, it will come up here, test the 50 RSI, go back down one more time, and then if it can move up from there, that would be the interesting point. So nothing on Citigroup. Caterpillar, at least it stopped going down. It's starting to move sideways. A close under the 30 RSI and back over the 30 RSI might be interesting, but that's really all it has going for it. So I'm not going to mark anything on Caterpillar. Celgene Corporation, it's just range bound. Really nothing there. Charter Communications. Well, what's good about Charter is that obviously we're in an uptrend, right? We're in a nice uptrend. And, I like to buy dips in an uptrend. See how we were going up, came back down into the value zone. And what I call the value zone is in between these two green lines. This is the 1 ATR channel and the negative 1 ATR channel. Generally, when you go back above that ATR channel, you're getting overpriced. Then you can come back into value. That's a better time to buy it. And as you can see, it came back into value here, came back into value here. Now we are back into value again. Now, just because it comes back into value does not mean that's an automatic purchase, but it's setting up into an area that's a good zone to be aware of and look at. So now that it's back in the value zone, for me to get interested in actually taking a position, I would have to have one of these bars in the near future go down below the previous bars and then immediately reverse back up. And when that happens, what the market's telling you is that it tested these lower prices, didn't like them, and reversed back up. So I will put Charter on the potential secondary list for us to watch for next week. Okay, Colgate. I don't like that we made a higher high than this high. Technically, if we make a higher high, we should have green bars and they should be equal to or greater than this. So that is a double top with a bearish divergence. So I would not be interested in this, given that this has happened in the recent past. If I were to be interested at all, it would be to the short side because of this high going higher than this previous high and not having any MACD readings here. That's more of a negative, but I don't do a lot of shorting, so I'll just let that one go. Comcast, just very choppy, nothing there. Capital One, we came up, we've made a lower high than the previous high. Just really nothing there. ConocoPhillips. ConocoPhillips is interesting because here we have this previous low, then we've rallied. Do you see how now we've come down, made a lower low, where this low is lower than this low? So if this low is lower than this low, then the MACD reading, the bars, the red bars, should be deeper than these bars. And you can see there's not even any red bars to the downside. That's called a missing right shoulder. So this is a good big term picture because we have a double bottom with a bullish divergence. I don't like buying when there's these huge bars right in front of me. So what I'd like to see from ConocoPhillips in the coming days is it moving back up here, possibly testing the 50 RSI, coming back down, then forming a V1, V2, and then we're off to the races. Because the people that bought down here, as soon as it gets up to a 50 RSI, the people that were lucky enough to have bought here will sell into that 50 RSI. That will probably cause it to come back down. If it comes back down, but it's strong enough not to go back down and make a lower low, then the next move up will probably be, the next move up will be more likely to sustain itself because the people that bought here that sold this first rally, these sellers are now out of the equation. So I will mark ConocoPhillips as something to watch. Nothing right now, but I like the setup, the context of the chart. Costco had a nice move up here. For me to be interested in Costco, I'd have to see it come back down into the value zone and have some kind of V1, V2 trigger to the upside. So I'm not going to mark that one. Cisco, we talk about this during the regular live stream. This did gap up after earnings. It has held the gap up low, which is positive. A close back above all these major moving averages with the last 2 days not being able to go lower, that might be interesting. It would just depend. So we'll go ahead and mark Cisco here. CVS, it's not interesting there at all. Chevron, not much there either. Donner, nothing interesting there, just moving sideways. Walt Disney, the thing about Walt Disney is that we had this huge move up. We've moved sidewards, which is actually a positive because the market is going down so much. So the relative strength of Disney has been pretty good because we're just moving sideways here. If I were to have a strong move back up over the 10 and the 5-day moving average, I would consider that because, like I said, the market has gone down so much and this has been able to hold steady, just moving sideways. So the relative strength of Disney is quite strong at this point. A strong move back over these moving averages, I would consider that. So I will mark that. Dow Chemical, nothing there. It's just a one-way downward move, unfortunately for Dow. Duke Energy, the utility companies did come to life last week, but in order for me to get interested in this at this point, I would have to have it come back down. I mean, see, we started to move ourselves into an uptrend, but now I would need a pullback, buying a dip, probably down into this area. So nothing really exciting for Duke. DuPont, nothing exciting there either. Emerson Electric has just been on a downward spiral here. So this has a lot of work to do before I would get interested in this. Exelon, well, MACD did go positive. We did take out this prior high. I think I'm a little late on this one. I think the interesting part for me has already happened 2 days ago, and so I did not buy this here. But I think this was a correct entry. When you have a higher low, this low is higher than this low. You take out this previous high. You take out this fractal. I think this would be a decent trade to be in. Friday's action was not good. but I think the correct day to get into it was here. So going forward, nothing on Exelon. Ford, boy, you look at Ford, you look at these 2 down days here on big volume. I just have a feeling all these rallies are going to be sold. I certainly could be wrong, but from a standpoint of getting interested in this and buying this, possibly a close below the 50-day moving average here and a close back above. But as it is, not right now. Facebook, close below the 50 and a close back above 50 would be my first point where I would be interested in Facebook. So I'll mark that, even though it is on a regular watch list. FedEx, my goodness. Yeah, this is just the one-way move to the downside. There's really nothing here at all that would get me interested in FedEx. General Dynamics. Yeah, nothing there either. General Electric had some trouble with this downward sloping 200-day moving average, so nothing interesting about GE at all. Gilead Sciences, it's range bound. It has this 200-day moving average above it, so nothing there. General Motors lost the 200-day. It's been on a lot of volume, a lot of distribution going on with GM, so not interested in GM. The only move here on GM would be a possible, see how we're at a 29.41 RSI, close back above the 30. That would be a legitimate entry point, but keep in mind those kind of trades are probably 2-3 day trades. You're just looking, the rubber band has been pulled so far to the downside and you're looking for a snap back. But if it snaps back, it might snap back to about here before it resumes its downward trend. So nothing on GM. Here's Google. I actually trade GOOGL. So here is the correct symbol for Google. A close back above the 200 might be interesting. Let's take a look and see what ETF replay says on that particular back test. And we'll go a 200-day simple moving average back test. Let's take a look here. Well, 232.8% compared to 547.9%. So, it does back test well. It doesn't make as much as just the buy and hold, but it certainly loses about half of what buy and hold. So yes, a close back above the 200-day would be interesting for me, especially with this higher low in place. So yeah, a close back above the 200-day, I would consider that. And then the other thing we have is we have the 10-30 crossover. The pink line is the 10, the blue line is the 30. This is based upon staying out of Google until you have the 10 crossing back over the 30. So let's test that and see what works out there. So that was the 10-30 simple moving average. All right. Okay, so this one has a lot more potential than the 200, doesn't it? The 1030 crossover system returned 1,012.9% and had a drawdown of 28.1%, where buy and hold did make a little bit more. It made 1129.6, but it had a 65.3% drawdown. So the 1030 cross back tests much better all in all than just regular buy and hold. So we are a long way from the 10-day crossing back over the 30, but when it does happen in time, and it eventually will happen just mathematically, but I will be buying that. But with currently with what's going on right here, I still would take a position if we could close back above the 200-day moving average. So I will mark that, even though that's in our regular watch list. Goldman Sachs, really nothing on Goldman Sachs. It's just been sold off and sold off and sold off. So nothing there. Home Depot. Home Depot had this gap down on earnings, closed back above the 200-day. Did test it on Thursday. Did not like it down below there. Stayed above. This looks decent. This particular fractal, I just got it here. Here we have a fractal. This high here with two lower highs to the left, two lower highs to the right. If we were able to break above this in the coming week, we would then break above the 50 RSI, which is positive, and it would get us over this range. So I will mark Home Depot as a possibility for the upcoming week. Honeywell, really nothing on Honeywell. IBM. Well, you can see we tested the 200-day, which is the black line back here, did rally from there. Thursday we came down, went below it. Interestingly enough, we do have a low here, we have a rally, now we have a lower low. Do you see how the readings of the MACD, the red bars here, is very shallow compared to how deep this was? So that is what is considered a double bottom with a bullish divergence. So this is not bad. I will mark that as a potential. What I'd really like to see again, though, I'd like to see one more test of this 200-day moving average and a close back above. But in the context of this chart, it's not. It looks negative, but this double bottom with the bullish divergence is positive. It's showing that the second bottom was running out of momentum. Intel. Well, Intel, you can see it lost the 200-day and has really stayed below it. We are at a 30.14 RSI, so technically the days before we were under 30 RSI and then we closed back above 30 RSI. So technically someone could buy this with their stop with a close under 30, giving them a very good risk to reward ratio. But at this point, it's just a little scary to me. What I'd like to see this rally, I'd like to see it come back, make a double bottom with the bullish divergence. That would get me more interested. If I bought it here, it may rally up to the 20-day moving average, but it may just be a 1 or 2 day trade. So I'm not going to mark Intel. Johnson & Johnson, it's doing okay, but where it's at currently, there's nothing. JP Morgan, we did close below the 50 and then back above the 50 RSI, which is a step in the right direction. My gut is if this keeps moving up, we're going to move up, come back down, test that 50-day moving average one more time. I think that would be the place to buy it. Who knows? This might just continue up and never come back down. But I think the day that you wanted to buy it was on Friday, because if it moves up higher, then your risk to reward starts getting skewed. So I will watch this to see if we can close back below the 50-day moving average and then back above, giving us a higher low in addition to a close under and back over the 50. So I will mark that. Kraft Heinz. Yeah, not good. So nothing on Kraft Heinz. Kinder Morgan, we did have a nice move back up. We are back into the value zone, which is positive. For me to get interested in this would have to stay in the value zone with small bars. See how this is a small bar and the day before this big bar? When there's a big bar anywhere in the equation in the recent past, and when I mean recent past, I mean in the last 2-3 days, it concerns me. So for me to get interested in Kinder Morgan, I probably have to have it close back under the 50-day moving average and back above. So we can mark it. and we can watch it. I do like that we made a higher high. And you see how this high compared to this high, look at the MACD line. See how tall they are compared to how short these were? So that's not a divergence, that's a convergence. That means this move up was really strong and people really did buy into that. And so when you have those first big moves, generally the first dip is a decent place to buy, but because of this large bar, it concerns me. So I did mark that, and we'll watch that go into the future. Coca-Cola, we made a high, made another high, made another high. Yeah, this would have to come back into this range to get me interested in that. Eli Lilly. Well, we had MACD go positive. We did take out of a range a couple days ago. It's not bad, but I would need some kind of V1, V2 entry, a stab down, a reversal to really get me interested in this, especially with these overhanging moving averages. So, we'll mark it. Lockheed Martin. It's continuing to go up, 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 and you can see the MACD readings, even though it's going higher, the MACD readings are getting worse. So this does not look positive to me. Lowe's really crumbled on earnings. You can see why. It's a good policy never to hold their earnings. You just never know what's going to happen. So not interested in Lowe's there at all. MasterCard. Had this big down day here. Really not interested in MasterCard. McDonald's. Again, we're going higher up here than this previous high over here, but the MACD readings are going down, down, down. That's not positive. Mondelez. It's in an uptrend, certainly. It's come back down into value, but yeah, nothing interesting there. Medtronic, boy, has moved up strong. So here we're moving up strong, but we're above the 70 RSI. We're at the 7135 RSI. For me to be interested in Medtronic, I would have to have this come back down, test this 200-day, burn off some of the oversold readings, maybe get down into the 60s. So this isn't bad, but again, I don't like to just buy huge momentum bars, especially in this level. I would rather see it come back down, test that 200, giving me a better risk to reward. MetLife had this huge kangaroo tail. A kangaroo tail is where you open low, you go all the way high, you go up a great distance, you come back down, and the close is back close to where the opening was. So this is a very bearish bar, so I wouldn't be interested in this going forward. 3M. Well, this has had a huge move down. It finally has started to move sideways. MACD looks like it's going to go positive, but I'm not interested in this right here. Altria Group. MACD has gone positive, but we have a lot of resistance above us, so at this point, nothing. Merck did break out nicely, but again, we're at a 64 RSI. It's a little overheated for me to buy. I would like to buy the first dip back into the value zone, so I will mark Merck. Morgan Stanley, like a lot of the financials, is really getting beat up. A close back above the 200-day at the very least, but we're coming from a lower low, so I think it's a bit of a subpar trade. Microsoft is just range bound, so nothing there. Next Era Energy, really big strong bar up. This is a utility play. I think the best move here, we're at a 75.22 RSI. The best move would be to wait for a pullback into value, which is a ways away, so I'm not going to do anything with this one. Netflix, just a hot, sloppy mess going up and down, so nothing there. Nike, um, I would be interested on Nike if we could get closer to the 200-day moving average and a lower RSI. Let me see what the RSI would be if we got to the 200 on Monday. 32. Yeah, whenever you get a confluence of the price being at a low RSI, and when I mean low RSI, I mean 30 to 33, somewhere in that range. At the same time, you're still above a major moving average. That is a good risk to reward entry point. So I am going to mark Nike. Nike is already on my normal list, but we'll mark it. Nvidia, my goodness, it's just a big old mess to the downside. We're to 2487, wasn't able to hold the 30 RSI, so nothing on that. Oracle has sold off strongly the last couple days on a lot of volume, so possibly on Oracle, if we had a close below the 100-day moving average and back above, that might offer good risk to reward, so I will mark that one for the upcoming week. Occidental Petroleum, well, we had this V1 entry, and a V1 is where here's day one, day two. Day two washes out the low of day one, closes back above the close. That did qualify as a V1 there. We did go under the 30 RSI and close back over. That is also a positive. Likely if you buy in this range, you're going to be targeting somewhere up in here. It's a snapback trade. So I think I'm just going to let this one go. PepsiCo, you can see the relative strength of PepsiCo has been very strong compared to the rest of the market because it's more of a defensive play. In order to get interested in PepsiCo, I'd have to have a close, have narrow bars come back into this channel, have a V1, V2 stab down and reversal back up. So we'll mark Pepsi. Pfizer is pretty strong, isn't it? Looks like it has closed above the 200-day moving average 1, 2, 3 days in a row. That is positive. If you were to buy here, your stop would just be any close under the 200-day moving average. So giving you a small potential. It's a 61.78 RSI. It's right on the bubble for me. It's right at the limit of me buying because generally if you really run, you're going to run to the 70 RSI, and so that gives you 8 points to the upside, and you have the third ATR channel up here too, and that tends to give stocks a lot of resistance. So we'll go ahead and mark it at the very least. Procter and Gamble, it's moved up, it's back into the value zone. A stab down and reverse back up would be somewhat interesting. Philip Morris, yeah, not with this big bar. It was looking promising here, but it really puked and went the other way. So nothing on Philip Morris at this point. PayPal, well, PayPal, we made a higher high. We've come back down. What I'd like to see on PayPal is a few more bars moving sideways, then a move down, reverse back up. A close below the 50 and back over the 50 would also be positive, so we can mark that. Qualcomm, boy. Well, listen, we're getting close to the 200-day. We're getting close to where we had a lot of support previously, and the RSI is a 3121 RSI. So I will mark Qualcomm here for the very fact that if we can get down, close under the 200-day, get rejected and close back above, it gives us a good risk to reward ratio. So I will mark Qualcomm. Raytheon, we have all this consolidation to sidewards, then we stab down, reverse back up. It looked like we were going to head back up. Now we're back up. Now we're back down into our consolidation range, although MACD has gone positive. It's honestly not that bad. Um, we have two options here. Here, see this fractal, we have a high with two lower highs to the left, two lower highs to the right. If we can break back above that range and that fractal at the same time, what RSI being, would probably be in the 57 range, still a moderate range, or just a literally close back above the 200-day, giving some good return risk to reward ratio. That's a possibility. So I am going to mark that as well. Starbucks. We're at a 46 RSI. There's a good chance that might bounce at the 50, close below, back above the 50, giving us a good dip buying entry point with a good risk to reward. So, yeah, I will mark Starbucks. Schlumberger, no. Southern Company, again, this is a utility company. People are buying this for yield. It's moving up pretty nicely. You'd have to wait for a dip, but really nothing pressing. It would take a while to form. Simon Property Group, no. AT&T, I did have a trade on AT&T last week. I got a big part of this move, but now it's a little high. Have to wait for a pullback, but it's not that close to a pullback, so I won't mark it. Target did gap up, and it held the low of that gap day. Currently, it's at a 68.69 RSI. It's just too high for me to buy, so nothing there. Texas Instruments, nothing really. United Health Group, possibly with a close back above the 200-day, but that would put us at a pretty high RSI, so nothing. I'm not going to mark that. Union Pacific, it is positive that we came down and we rejected the 50-day and moved back above. That is positive for sure. Let's take a look at the weekly. Yeah, it's not that bad, but at this point, I literally would need to close back below and back above. So we'll mark that for a potential. UPS just moving down. USB. Well, potential for USB would be a break back above this particular fractal. Here's the high point, two lower highs to the left, two lower highs to the right. If we get back above here, we will be above a 50 RSI. Any reading above 50 RSI shows positive momentum, and any reading under the 50 shows negative momentum. So at this point, I would like to see a break back above here. We might be able to go back and challenge these old highs, so I will mark that one. United Technologies was not able to hold that 50. Probably the next stop's the 200, so nothing there. Visa. This is actually a short that I had last week. We had a good day on Friday or Thursday, excuse me. Really nothing there at this point. Verizon. I did actually take this trade when we broke above this previous high and had a nice big move up, and then got out here. So right now, I just think this is going to be moving sideways. Walgreens, yeah, nothing there. Wells Fargo, nothing there. Walmart, we did have a MACD crossover here, which is positive, but I don't like this big gap up and reversal. It's going to be tough to get back above this area, so nothing there. And Exxon has lost its 200-day moving average. Let me take a look at the weekly on Exxon. Yeah, it's looking pretty bearish. Okay, so with that being said, what did we mark? So let's go through quickly. These are the ones that we marked. And so I will be creating a list, a secondary list during the live stream on our Monday through Friday show during the last hour of the market. And so we'll be going through my regular watch list, but then some of these new stocks that we flag today, we'll also be looking at those because they do have some good potential. So Apple. So Apple is in my regular watch list. So I'm going to uncheck this because it's already going to be in the watch list that we normally look at. But what am I looking for on Apple? Like as we discussed, in the future, looking for a 10-50 moving average crossover to the upside, and or a close back above the 200-day moving average. That would be option number 2. Option number 3 would be a close below the 30 RSI and then a close back above the 30 RSI for a snapback trade. But remember, that is a short-term trade. That is likely a 2, 3, 4, possibly 5-day trade. It's not a long-term trend trading type of approach. It's a counter trend move. So the trend trades would be the 10-50 crossover to the upside, the close back above the 200, but the under 30 over 30 is more of a snapback trade. So that's Apple. I'm going to uncheck Apple because, like I said, it's already in my regular watch list that we'll look at every day. I just want this new watch list to be something that we wouldn't normally look at. Allstate Corporation, MACD did go positive. If we can get a break back above this previous high, this fractal, that would be interesting to me. RSI would be in good shape. It would not be overbought. So Allstate is something we will put in the new watch list because it's something I don't normally look at. Amazon, a few different options on Amazon. We have the close under the 200-day, the close back above the 200-day. That would be a good back-tested approach. The other option on Amazon would be the 550 moving average crossover system. Currently, it's underneath the 50, but a close back over. That's a good long-term trend following approach for Amazon based upon the results that we saw on ETF replay. So Amazon is in my regular watch list, so I'm going to take it off of this one because we'll be watching it anyway. BlackRock, it is good that we tested the 200-day close back above. I would like to see this close under the 200-day one more time and then back above. BlackRock is not in my normal list, so we will keep this one in the secondary list. Charter Communications, I do like it. It's moved up. We're back into value. I would like to see this move sideways for a couple days, stab down, reverse, trigger a V1, V2 back to the upside, showing us that these prices here were no longer valid. So I will keep that one in the watch list, or I will keep that one in this particular watch list because it's not in my regular watch list. ConocoPhillips, I do like the fact that we have a low, we have a rally, we make a lower low, but we have a bullish divergence based upon MACD. Probably really what I'm looking for here is I'm looking for a snapback move up to here. Not that I would buy it, but I'm waiting for that snapback move to happen. Then move back down, then get a V1, V2 entry, and then we could possibly be off to the races because the majority of sellers will be out of the equation. So I will keep Conoco in our list. Cisco, it has been able to hold this prior low. MACD has gone positive. A close back above the 50 may be interesting, but I already have Cisco in my main watch list, so we will take this one off of the watch list. Walt Disney, I do like the relative strength of Walt Disney, that we've moved up strong, we've come down, but now we've moved sideways while the whole rest of the market has gone down. This sets up a nice move to the upside once the market decides it can go up again. So what I would be looking for here would be a close back down below and then back up for a V1, V2, or a close back above these moving averages here would also get me interested. I do have Walt Disney in my regular watch list, so I'm not going to include it in this secondary watch list. Facebook, it closed under the 50, back over the 50. That would be interesting. But again, I do have Facebook in my regular watch list that we look at every day, so I'm going to take that one out. Google. So the options on Google were the 1030 EMA cross, Looks like it's a long way from happening, so I don't anticipate that happening next week. But we could get a close back above the 200, which would give us a good risk to reward ratio, and it does back test positively based upon those ETFreplay.com tests. I do have Google in my regular watch list, so I won't add it here. Home Depot, this is pretty strong. I would like to see Home Depot come back down, test that 200-day one more time, give us a better risk to reward ratio. Home Depot is not in my regular watch list, so we will keep this one. IBM, again, we have a low, we have a rally, we have a lower low, we have a bullish divergence, which is positive. If I could get one more close below the 200 and then one more back above, I think that would be the entry point for me. IBM is not in my regular watch list, so I'll just go ahead and we'll keep this one in our secondary list for now. JP Morgan, I think this is going to come up to the 50, come back down, possibly test that 50-day moving average again, but at this time with a higher low instead of a lower low. So here we're a lower low. If we can move up here, come back down, close below the 50, and then back over, that would be interesting. So JP Morgan is not in my regular watch list, so I will be keeping this one. Kinder Morgan, I'd have to have this move sideways for a couple days. Stab down, reverse. I will keep this one. That's not in my regular watch list. Eli Lilly. On second thought, now that I look at Eli Lilly, now I do not like it as much as I thought the first time. So I'm completely going to get rid of Eli Lilly. Apologize for that. Okay, Medtronic. It's very strong that we broke over this fractal. We broke over the 200-day. The only issue with it now is that it's above 70 RSI. If we get a pullback to that 200-day again, that would make me feel better about getting into this in an entry into this stock, because the risk to reward would be better. So this does look very strong to me, strong volume. I would like to see if we could get a pullback. If it doesn't pull back, then I'm not going to be interested in the stock, and it may just continue to move on up, and that's fine. But that's how you have to look at these. You have to look at, if this happens, then I may do something, but it may never happen. But if we could get a close back closer to this 200, would give us a lot better risk to reward profile. So we'll keep that. Merck, close back into the value zone between the green lines would be interesting. Merck is on my regular watch list, so I'll remove it from here. Nike, I do like Nike. If we could get closer, a close under this 200-day moving average and then back over, that would be a really good risk to reward entry point. But Nike is on my regular watch list, so I will remove it from here. Oracle, a close under the 100-day and back over the 100-day would be a good risk to reward entry at that point, and I think it would line up with a nice low RSI. So Oracle is not in my regular watch list, so I will keep it on this watch list. PepsiCo, again, moving up nicely. I would like to see a pullback into the positive one, negative one ATR channel somewhere in here, and then have a V1, V2 entry. So we'll keep that on the list. So Pfizer, it's above the 200-day moving average. It's been able to stay there for 3 days. It's, like I said before, it's right at the top of the range of where I would buy this. I'd like to see it come down below and then a close back above. That giving me a higher low close back above. So we'll keep Pfizer. Procter & Gamble did make a nice move up, sideways, stab down, reverse. So it has a decent setup here, but we just need it to do a few more things for us to get an actual trigger into the trade. PayPal, if it moves sidewards, Stab down, reverse, did a V1, V2 to the upside. That'd be interesting. I do have PayPal in my regular account, so I'll take it off here. So Qualcomm, pretty interesting. If we can get back down to this level where you have a low RSI and right at the 200-day moving average, that gives you two strong areas of support in addition to the prices down here. So I don't have this in my other watch list, so I will keep it here. A close back above the 200-day while the MACD is positive is pretty good. On Raytheon, also a close back above this previous high here might be interested, so I will keep this one. Starbucks, looking for a close under, close back above the 50-day moving average, so I will keep it here. Union Pacific, having a close under the 50, the gray line, and back above would be interesting, so I will keep it here. And then U.S. Bancorp, couple options on this would be a close back below the 200-day moving average, close down and then close back above, or a move up taking out this prior high. So let's redo. So I did take off some of the ones that look good, but they're already on my watch list. So these are the potentials: Allstate, BlackRock, Charter, ConocoPhillips, Home Depot, IBM, JP Morgan, Kinder Morgan, Medtronic, Oracle, Pepsi, Pfizer, Procter & Gamble, Qualcomm, Raytheon, Starbucks, Union Pacific, and U.S. Bancorp. So those are the that's the list of the secondary stocks that I may be interested in taking a look at in the coming week. All right, so let me turn that back on. Hey, there I am. How you doing? So, okay, well, listen, I hope that helped. Like I said, my regular live stream is Monday through Friday during the last hour of the market. And then I go through my watch list and do what I did here today with breaking down. And then I actually place trades during the end of the day as well. But I'm going to start doing this on the weekend where I go through the S&P 100 and see if we can find some secondary potential setups to add to my regular watch list, just to give us a little bit more depth and more options. So anyway, I hope this is helpful. I do want to mention that I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. So if you feel like your trading could use some help, I'd be more than happy to help you with that. Just contact me. My email and my hourly rates are in the description of this video. So once again, thank you so much for spending your time and watching this. I hope it was helpful. Like I said, if any questions, just let me know. You can email me. And I hope you enjoy the rest of your Memorial Day weekend. And if you haven't been able to visit us during our live stream, once again, it's Monday through Friday during the last hour of the market. So, all right. Thanks again. Enjoy your weekend. And on the way out here, I've got to play the U.S. required legal disclaimer. So thanks again, everybody. Take care.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.